Welcome to the Commercial Property Podcast. My name is Suzi Carter. I am a chartered surveyor. I've been involved in commercial property in the UK for 30 years and I've done hundreds of commercial property deals. I'm here to be your guide through the commercial property market, whether you're an experienced investor or whether you're literally thinking about dipping your toe in the world of commercial real estate. I will be here talking to you about all kinds of things commercial real estate in the UK, and I've also got some fantastic guest experts who are joining me. So please do subscribe if you'd like to follow, and if you'd like any more help or information on commercial real estate, please do click www.suzicarter.com, which is my website, and you can find out all the ways I can help you. So stay tuned for this week's episode. Welcome back to the Commercial Property Podcast, and today I'm going to be talking about follow-up and how important it is to get commercial deals. And so you might think, my goodness, how is she going to make a whole podcast episode out of that one? Well, I have to think that it's actually crucially important in investing to follow up on deals. And I'm going to give you some examples today of how powerful that is, and why I think that follow-up is so underrated as a skill amongst property investors. And I'm talking about residential actually, as well as commercial, but particularly for commercial investors, this is a very, very important skill. So let's get going. So when you are looking for a commercial property deal, the last thing you really want to be looking at is the asking price. So why am I saying that? Well, this is from years of experience, is that sometimes there is a lot of skill and a lot of thought that goes into asking prices. Sometimes the asking price is just what a vendor thinks the property's worth. So I've lost count of the number of conversations I've had with commercial owners or commercial agents where I've kind of said, well, how did you get to the price? That yield feels awfully low. And they said, well, that's what the vendor's looking for. That's what the vendor wants. That's what they believe it's worth. You find that a lot of commercial owners, because commercial property ownership can last tens of years. There's lots of commercial property owners out there who've owned their commercial real estate for a very long time. And so, what we think is that property values double every 10 years and therefore, how much it's worth. But of course, with commercial, much more than residential, actually, we have our up markets and we have our down markets. And it really depends on sectors as to how well they've performed over the longer term. And, this is quite sage advice for our portfolio building as well. Because if, for example, you bought a high street unit 20 years ago, that was, there was arguably at the peak of the high street. There is a strong argument to say that was at the peak of the high street. You've got lower values now. You've got more competition now. There's loads of shopping centres sprung up over the last 20 years. We've had COVID in the meantime, and that commercial property comes in and out of fashion depending on whether businesses in that sector are doing well or not doing so well. So you find that, commercial property sectors, they are, at their prime, and then potentially sometimes they fall away. So obviously one of the skills in our investing is to find properties that will be good for the longer term. But, so things like industrial logistics, 20 years ago was nowhere near as successful as a sector as it is today. But because of the rise of online, primarily because of the rise of online shopping and online transactions, logistics has become more and more and more important. You're kind of targeting the trends. So you'll find that some sectors that maybe 20 years ago or 15 years ago or 10 years ago, or maybe even 5 years ago, pre-COVID, were actually at the peak of the market, actually now potentially may have fallen or at least leveled out compared to their purchase price. So why is this important? Why am I labouring this point? Well, that's because a lot of vendors have false expectations of what their property's worth. Just because they've owned it for 30 years doesn't mean that there's necessarily, linear capital appreciation in that asset. So vendors' expectations very often, if you think about a graph, vendors' expectations before they go out for a sale, before they've even spoken to an agent, if they've got, if they've got high expectations, they'll probably be at their highest. They will then speak to an agent and potentially even choose an agent based on their valuation. So if an agent gives a valuation they don't like, they may well not appoint them because they just don't believe them, even though that agent might have the realistic valuation. So they would choose an agent that potentially will go along with their thoughts on value. An agent would usually, agents are pretty professional most of the time. Agents will probably say, well, let's test the market and see whether we can get it. It's a nice sop to a client to get the instruction. So then if you think about our graph, peak expectations. Now, some properties, they'll be proven right, that they will be proven right. But others, the longer they're on the market, the more kind of maybe what they consider derisory offers come in, the more in their expectations are dropping and dropping. Now, think about this scenario. Not only has this property potentially been on the market, not getting the offers that you want, but suddenly you've got this other pressing issue that maybe a year ago, 6 months ago, maybe even a couple of months ago wasn't an issue, but suddenly has become that. So, the top three are debt, death, and divorce. But there's lots of reasons, so finance, I'm coming up to refinance. Rates have gone up, LTVs might have gone down, income might have gone down the property, which isn't able to cover the higher interest rates. And therefore, potentially they're going to be negative equity. They might not be able to refinance. Suddenly, there is a big motivation there. Death, the family of commercial property owners, it's very, very common. I speak to a lot of commercial property owners, families who literally are like, I don't know what to do with this asset. I just need to offload it. Divorce, splitting assets, needing to raise finance. And there's lots of other reasons, like there might be more motivation at some point due to EPCs. There might be motivation in that there's a lot of work that needs to be done to a property and it's fallen vacant and, the vendor hasn't got enough money to do it. It might be that that particular type of property has fallen out of favour amongst tenants. And actually, the owner hasn't got enough information to realise that potentially if they reconfigured or changed the use, they could actually add loads of value and they just want to get rid of it. So businesses tend to, and owners, they'll review their obligations, they'll review their overheads and the problems in their portfolio on a relatively regular basis. And so, they might start off bullish, they may not want to accept offers, but over time, potentially with the affluction of time, as time goes on, they may get more motivated, particularly if suddenly other factors come into play, personal factors, business factors, debt factors, whatever it might be, they come into play and suddenly their motivation goes up. So let's think about that as a scenario. So if you as an investor are putting an offer out to an agent, so first thing is I would say ignore asking prices, work out what you can afford to pay and work out how you can make some money out of your assets. So there's no point paying an asking price where you can't do any asset management that makes any money, because that's the name of the game. You want to try and add value, you want to try and get your money out. So we're not going to overpay for commercial property. And by the way, plenty of people do. I just don't think it should be you. So, we want to put offers out that are realistic. Now, in the current market, there are asking prices that I think are pretty high. Now, some of them are justified, of course, but others are just, that there may be reasons why they're too high. The vendor might want too much money. They're valuing the property, assuming it's let and it's vacant. The agent has put a high valuation on to get the instruction, whatever it might be. But that property hasn't sold. It hasn't sold. It hasn't sold. It hasn't sold. So you've put an offer out, and so what I would usually say to an agent is, I'm not going to get anywhere near the asking price. Would you still like me to submit an offer? What that means is it's kind of a cheeky offer, and it's completely your prerogative whether you want me to submit it. But if you do, don't blame me that it's a cheeky offer, because I've already told you. So, and sometimes they'll say, nah, don't bother. We've got offers at close to the asking price. And other times they, yeah, go on. I mean, more often than not, I find that they tend to say, yeah, just put it in. And, they're under an obligation to put it to their client then. Now, if they say don't, by the way, if they say don't submit it, I would still follow up with an email saying, thanks for the chat. Great to speak to you. As you know, we are at around this figure, subject to contract. If circumstances change, let me know. And if you get anything else similar, let me know. And I would usually give a reason to the agent why I can't get to the asking price. Like, I just don't, it doesn't leave me any room for my strategy or whatever, So it's very entirely legitimate in terms of, for my particular circumstances, it doesn't work. You don't need to fall out with agents if you put low offers out. And then perhaps they accept an offer. Perhaps there's an offer that's acceptable and they accept it. Or perhaps they don't even have any offers. And so that they think, well, we'll just give it a bit longer. Now, let me give you two scenarios. Number one is that you just go off and find something else. You forget about that property. You go off and find something else. Scenario two is that you put in your diary once every few weeks, 3-4 weeks, maybe a bit more, bit longer. You put a follow-up call in, and you have a really great system that you've put in place where you will follow up with an agent, with a vendor. This works just as well with direct to vendor type approaches as well. So you follow up. So, hi, it's just me. Just wondered how you're getting on with that property. Oh, okay, it's still in legals. Great. Okay, well, I hope you don't mind. I always ask permission. Hope you don't mind if I just follow up again. If you can't get hold of the agent, sometimes they won't pick up. Just drop an email. Say, hi, it's me. Just checking in on that property. First time they might ignore you. Second time they might ignore you. Third, fourth, fifth, sixth time they might ignore you. But if that transaction doesn't go through, or if they don't get any offers anywhere near the asking price, and then, first of all, with the passing of time, motivation may increase, and suddenly the offer you put out 6 months ago or a year ago, or maybe even a year and a half ago, I've had 2 years ago, might suddenly seem quite attractive. Or circumstances of the vendor may change, or the market may change. Actually, I'm seeing a lot of vendors at the moment who are worried about the market dropping. And there's such a mess with what's happening politically, economically, globally. So sentiment is slightly tetchy at the moment. So there's a lot of vendors at the moment that are worried about not actually what's happening, but what has potential to happen. So suddenly it's like, I'll sell out at my desirable price minus 20%, because actually I'd rather just get it out. I just get it away because I can see there's like a debt window looming or whatever. Or there's some circumstance that has just changed, whether it's a personal circumstance, business circumstance, financial circumstance. So suddenly they become more motivated. There's an illness, there's a death, there's a separation, divorce, there's maybe repossession looming, maybe the tenant left, maybe that they found some structural issue they have to fix. Whatever it is, we are property problem solvers. I know it's a bit corny to say it, but we are. And so, our job is to do that. And, don't worry that you think that you're going to miss out on everything, because you're not. And there will be angles that vendors can't see because they're not got the knowledge that you have. So, for example, if there's a larger an owner-occupier owns a larger industrial unit and they just can't let it. Maybe they've had it on the market to let, that they've moved out, they want to let it, or maybe they just want to sell it, but actually the price is really low because there's not much of a market for that size of unit. Now, you might know that actually if they subdivided that, or you subdivide that into smaller units, maybe you could double the rents, because that can happen in quite a lot of locations, but they don't know that. So you've got a greater knowledge about the market than they have. So, sometimes, they're selling out at lower prices because they don't have the knowledge of the strategies that you may have. So be the person that in 3, 6, 9, 12, 24 months, whatever it is, the vendor goes, they followed up regularly. They're obviously, they're interesting. We've built some rapport. Rapport is really, really important because, if they know, like, and trust you. Because when vendors have motivation, there's only really two things they want to do. Is they want to move quickly and they want to make sure it actually happens. So they want speed and certainty. So if they've built up some rapport with you, or you've been the only one who's been reliable enough to follow up, then they will know that probably they will, A, you'll be the first person that comes to their mind, but B, they will know that you'll probably deliver because you're keen. You've been following up. Now, you're not keen at the price that it was advertised previously, because it's not worth that. But you're keen, and they also know that if you've got the reliability to follow up once every 4 weeks, 6 weeks on this transaction, then you're probably reliable enough to complete. Now, just to kind of add to your credibility, if you're a cash buyer, undoubtedly you're going to give that speed and certainty. So if you don't need finance, you're not going to have to wait for commercial finance. Then undoubtedly you will be in a much better position. So stress your experience levels, stress the fact that you can get these things exchanged within 4 to 6 weeks. A direction of travel, a willingness to move forwards is super important to vendors.
This episode is brought to you by Bond Finance Limited, your trusted partner for commercial property mortgage solutions. Are you an experienced residential property investor about to diversify into commercial property, looking for funding options? Bond Finance can help. Whether you're planning to expand, refinance, or make a major property investment, Bond Finance provides expert advice with access to a wide range of lenders, from high street to specialist. Book a free discovery session today to explore how we can tailor commercial funding solutions to your unique investment strategy. Visit www.bondfinanceltd.co.uk and take the next step in your commercial finance journey.
So make sure that you stress, all the factors why you're credible. In fact, you should do that in your offer letters anyway. I'm an experienced investor of 30 years experience. I've got an extensive portfolio. I'm a cash buyer and I can exchange within 6 weeks. What about if someone just put a vanilla number out there? Just compare the two. Also, the person that picks the phone up, builds relationships, can really get the edge as well. So follow up. So what we're talking about here is follow up. We're talking about the fact that you are the only person, and I'm telling you, you will be the only person, because so few people do this. You will be the only person that has bothered to put in their diary a follow-up schedule. You might have a CRM system. The systems are so important. So you'll have a system. Your VA will remind you, or whichever system you want to put in place. You have a system whereby you follow up on deals. Now, of course, if you're putting multiple offers out, you're going to have to follow up on multiple deals. So make sure you do it. It's the easiest, I'm telling you now, it's the easiest thing in the world not to do. I don't want to sound preachy, far from it, but I kind of feel really passionate about this because it's something that hardly anybody does. And the amount of really serious investors I know that get deals on a regular basis because they are the only person that follows up to direct to vendor approaches and to agents. It's unbelievable how quickly you can suddenly start getting a pipeline just from follow up. So, and of course, once you've bought a deal from an agent, once you've bought a deal from a vendor, they may have a portfolio. Agents certainly have multiple deals on the go. Suddenly you become the go-to person. You're reliable. You're reliable enough to follow up. You're reliable enough to get that deal done. So I'm going to start sending you off-market opportunities where vendors are very motivated anyway. And suddenly it all becomes such a beautiful cycle that you're part of, all because you put in your diary to follow up on a deal. So that's why, what I'm telling you now is absolutely not sexy. It's never going to sell any courses. It's never going to kind of, be the headlines in a social media post. It's just really, really important. So don't underestimate the skill and the art in follow-up. Don't underestimate the amount of systems and discipline this is going to need. But also don't underestimate how important this is in achieving the deals that you want to achieve in commercial property. And, I think even more so than in resi, this is a real skill that every commercial investor has. So yeah, hopefully that's useful. It's not sexy, but it is very, very clever. So if you want to, this is something that I teach extensively on my board. So if you want to learn more about how to get deals in ways that maybe other people can't be bothered to get them, then my next board starts at the end of September 2025. And if you're interested, we'll put the link in the show notes. But other than that, I look forward to seeing you next time.